Starbucks shares taking a spill today on some big concerns brewing in China. Let's get to Kate Rogers with the details. Kate.
Hey, Melissa. Starbucks looks to be falling in sympathy today with Yum China after the KFC parent company warned that its adjusted profit would take a 50 to 60% hit in Q3 as the Delta variant impacted its stores and sharply reduced its sales. Now, at the peak in August, more than 500 of Yum China's restaurants in 17 provinces were either closed or offered only takeaway and delivery. This led to same-store sales declines by the mid-teens year over year and by about 20% on a two-year basis. The company said the recovery there will take time. It also said it was being pressured by higher commodity prices, wage inflation, and an increase in promotions. Now, the news seems to be weighing on Starbucks stock today, falling about 3.5%, also set to have its worst day in 8 months. China is Starbucks, of course, second home market with more than 5,100 stores there. Last quarter, same-store sales in China for Starbucks grew by 19%, but the company has guided for comps in the upcoming fourth quarter to be roughly flat. It also updated its guidance to a full-year range for China's same-store sales of 18 to 20%, down from 27 to 32% last quarter, though CEO Kevin Johnson did reiterate confidence in the long-term plan in China in Starbucks earnings last quarter. Melissa, back over to you.
All right, Kate, thank you. Kate Rogers. Tim, should we be concerned about this?
No. Kate checked every box I would have brought up, which is that, first of all, they've already guided down on China. She pointed where the fiscal Q3 wasn't that great. International overall wasn't that great. The long-term China strategy very much intact. But this is a North America story. This is 72% of the top line. This is a growing ASP, or ultimately their margins and their loyalty program. And the multiple that the company's trading at is a function that they're pushing higher prices onto their consumers. So, look, I don't love this news, but I'm not worried on China's news and how it's imputed on Starbucks, especially when the company's already guided you that it wasn't really a great quarter last quarter, and that this was going to be potentially a headwind.
When was their guidance? Do you remember roughly when it was? If it was the end of August or the beginning? I don't remember.
July 28th. I think it was July 28th.
Okay.
If I'm
so we
not
did
mistaken.
see the peak. I guess the question is, we did see the peak of Delta in China when they guided. Because peak of Delta in China, I believe, was mid-August or so, roughly.
Yeah.
Guy, what's your take?
And I'm sorry to jump in, but yeah, I was just happened to be looking at it. That's why I think I knew the answer. But Tim's exactly right. It's the U.S. story. U.S. comps were up 84% last quarter, year over year, and that totally blew away what the street was looking for. Now, people will point to valuation, and you can understand the headline of 31 times next year's numbers are expensive, but you're still talking mid-teens EPS growth. And I think that China's factored in. So to me, you're looking for an entry point to buy the stock. And I think they probably don't report until early November.
Yeah. Grasso, how about you?
Yeah, when I look at a chart, it's definitely rounded off. But this is not uncommon for Starbucks to give up a healthy amount in percentage points and test that 50 or 100 day. And right now we're at the 100 day. So to Guy's point, I would be a buyer when this levels off above 115. It's 115.37 is the 100-day moving average. This isn't America's story. It's less than 20% everywhere else in the world. I think they check a lot of boxes. In a COVID environment, they're successful. Non-COVID environment, they're more successful. I'd still be a buyer of Starbucks.
Then this really shows how jittery investors are in terms of the impact of Delta, maybe around the world. I mean, things may be looking better in the United States when it comes to Delta, but it's not necessarily the case elsewhere, Karen. I mean, is that your take? I mean, even if you're not an investor in Starbucks, you take a look at that Yum news and you think 50 to 60% guide down on their earnings for the quarter, for the third quarter. That's rough stuff.
It is rough stuff. I mean, they're able to do that, to just really literally shut down cities of, 4 or 5 million people. But I think that investors will really look through that. I think it doesn't matter what Starbucks reports for this current quarter that we're in about China. I think that the market is saying, all right, we know it's going to be a really, difficult quarter. I think it's going to be more important. What is the commentary? What are they seeing? Are things opening up? Are they starting to get back to normal? And more important than that even is, of course, the North America part of the story, where I still think there's room to run. But it is not cheap. I mean, it deserves to be a premium, but it's probably a little bit of an extra premium, and I'm long. So this isn't enough of a pullback for me to add stock yet.